Investors are worried that the stagflation of the 1970s may reappear in 2022 as a result of persistently high inflation and swiftly rising interest rates. Real estate was one of the market's best-performing sectors the last time stagflation was an issue. Real estate investment trusts, or REITs, allow investors to participate in real estate without the hassle and expense of purchasing actual property. The majority of the many distinct forms of REITs generate large dividends and act as steady sources of income. In this video, we will take a look at the 10 of the best real estate stocks to buy in 2022, according to CFRA analysts. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Number 10. Highwoods Properties, Inc. A fully integrated office REIT, Highwoods Properties Inc. owns, develops, buys, rents, and manages properties principally in the most prestigious commercial areas of Atlanta, Charlotte, Nashville, Orlando, Pittsburgh, Raleigh, Richmond, and Tampa. Over 1,500 clients rent space owned by the corporation totaling 26.9 million square feet. In the 8 markets indicated, 91.1% of their 162 structures are already occupied, according to their most recent report. The district, which has its headquarters in Raleigh, contributes 24% of HIW's net operating income, followed by Nashville, 22%, and Atlanta, 16%. The business has purchased 2 locations in Charlotte, one in the South End and one in the Uptown CBD submarkets. This amounts to a $230 million investment overall. The business keeps buying, selling, and developing throughout the BBDs. Number 9. Agree Realty Corporation. In order to buy and develop properties leased to significant retailers, Executive Chairman Richard Agree established Agree Realty Corporation in 1971. In 1994, it became a publicly traded company on the New York Stock Exchange, and since then, it has expanded its portfolio to include 1,404 properties in 47 states with a combined leasable area of 29 million square feet. Walmart Inc. is the owner of 6.6% of ADC, paying $24.5 million in annually basis rent. Tractor Supply Company, Dollar General Corp., and Best Buy Co. Inc. are next in line. The business primarily targets businesses in the supermarket, home improvement, and convenience store industries, which are constant necessities, keeping them stable in any circumstance. According to the most recent report from July 2022, ADC has a market value of $5.50 billion and a price per share of $73.11. Number 8. American Tower Corp. The world's largest independent portfolio of wireless communication and broadcast towers is managed by American Tower, a specialist REIT. As of October 10, shares of American Tower have decreased by nearly 34% in 2022. However, according to analyst Michael Elliott, the company is reasonably valued at this point because supply chain problems, foreign exchange headwinds, and acquisition integration risks have already been included into the firm's price, making the weakness a buying opportunity. According to Elliott, the proliferation of mobile video, unlimited data plans, and international markets will be positive factors for American Tower. AMT stock, which closed on October 10 at $189.58, has a buy rating from CFRA with a $300 price target. Number 7. Prologis Inc. An industrial REIT with a focus on logistics real estate is called Prologis. Elliott claims that given the difficulties in acquiring zoning rights, there is a high barrier to entry for competitors for the company's assets in strategic locations. He claims that Prologis stands out from its competitors due to its exceptionally valued real estate portfolio in places with a limited supply of land. Although there are still problems with the supply chain, Elliott believes Prologis should continue to be able to set its prices as it only accounts for 5% of the total costs. PLD stock, which closed at $98.90 on October 10, has a strong buy rating from CFRA with a $158 price objective. Number 6. Equinix Inc. The biggest operator of data centers in the world is Equinix, a specialist REIT. According to Elliott, there are chances for Equinix to grow its current locations, and there is little competition because the data center industry has a high barrier to entry. Additionally, he adds, the business has a highly recurring revenue base that provides investors with outstanding financial visibility. Numerous prominent IT businesses choose Equinix as their partner of choice thanks to its cloud-based global platform, and its Equinix Metal service has shown strong bookings growth in recent quarters. A buy rating and $785 price target are assigned by CFRA to the EQIX shares, which on October 10 ended at $527.93. Number 5. Public Storage. The largest owner of self-storage facilities in the United States is Public Storage. According to Elliott, Public Storage has a broad portfolio of high-quality assets that should profit from strengthening market fundamentals. In 2023, he anticipates that demand will continue to exceed supply, enabling Public Storage to raise rental rates while maintaining nearly record occupancy levels. Additionally, Elliott claims that Public Storage may continue to make opportunistic purchases to enhance the quality and depth of its portfolio without incurring excessive debt because it has $1 billion in cash on its balance sheet. A buy rating and $371 price target are assigned by CFRA to PSA shares, which on October 10 ended at $287.60. Number 4. Realty Income Corp. Realty Income is a retail real estate investment trust, REIT, that owns, develops, and operates single-tenant properties in the U.S. with a 5.2% dividend yield. Realty shares have the highest yield of any stock on this list. The stock is also the best-performing investment on this list, with a year-to-date decline of just 17.2% as of October 10. Compared to many of its competitors, Realty Income, according to Elliott, is more protected from the difficult retail climate. Given that the majority of its tenants are non-discretionary or service-based companies, it makes for a fantastic defensive investment. O stock, which ended October 10 trading at $57.35, has a buy rating from CFRA and a $79 price target. Number 3. Welltower Inc. Welltower is a healthcare REIT that makes investments in medical office buildings, elder housing, and specialty care facilities. As COVID-19 risks continue to decline, according to Elliott, occupancy rates and pricing power should increase over the ensuing 12 months. The epidemic prevented the development of new facilities, resulting in a supply-demand imbalance that may be advantageous going forward. According to Elliott, the longer-term secular demand driver for senior housing and healthcare facilities will be an aging population. In 2022, he expects revenue to increase by at least 22%. Well stock, which ended October 10 trading at $57.37, has a buy rating from CFRA and a $91 price objective. Number 2. Equity Residential. A residential REIT called Equity Residential owns and manages apartment buildings all throughout the United States. According to analyst Kenneth Leon, Equity has the potential to increase lease rental rates soon. Additionally, major metropolitan markets like Los Angeles and New York City have underperformed Equity's coastal markets. According to Leon, the California property market is so pricey that it is driving up demand for rentals. Longer-term demand for multifamily rentals will be supported by the entry of Gen Z workers into the workforce. Leon anticipates a 12% increase in revenue in 2022. The EQR stock, which ended on October 10 at $62.10, has a buy rating from CFRA and a price target of $85. Number 1. Extra Space Storage Inc. One of the biggest publicly traded self-storage REITs is Extra Space Storage. Elliott claims that Extra Space's strong performance in the first half of 2022 was driven by high demand and high occupancy rates. He anticipates that these positive trends, which include revenue growth that is close to records, will continue in the second half of the year. Given the challenging year-over-year comparisons from 2021, the company's most recent growth figures have been especially impressive. According to Elliott, last-mile delivery solutions sought after by online retailers will continue to be a catalyst for secular growth. EXR stock, which ended October 10 trading at $165.62, presently has a buy rating from CFRA and a $216 price target. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.